There is no question that interest rates are the key thing that everybody in this real estate market is watching. Hi, I'm Mike. This is Mondays with Mike. And we've covered this topic quite a bit the last few weeks, but it really is the key factor because we've got record high home sale prices. And if you start to combine that with not record high, but higher interest payments or mortgage payments, we start to have a problem. And I'm going to get a little bit into the what ifs on this one. But first, just an update. If you look at this first quarter of 2022 and you compare it with first quarter or even all of 2021, we've got mortgage rates up 55% year over year. That's using the numbers from last week. Yet to be determined what happens this week. But just give you an idea on a national basis, and this doesn't really apply, you'll have different numbers in the New York metro area, but we've got the median home price went from 309,000 to 357,000 in that same period of time. So that's a big increase. Those numbers may sound magical to people on Long Island or New York City who you can't get anything for that price for the most part. But nationally speaking, it still translates to a very big gain, and we're seeing similar gains here. Now, in the same period, if I'm going to read off the screen, which I don't normally do, but I want to get this right. We had interest rates rise from 2.67 to 5.08 as of the end of last week. We're talking about an average for the 30-year fixed. It's a very big difference. So that's where we get that 55% difference. We have people that are seeing $600 extra in their monthly payment if we're assuming 10% down. Again, we're making a lot of assumptions here, but just want to give you a top level idea of really how much interest rates have jumped. So let's get to the so whats. Well, already I'm looking at Redfin data, which all these big brokerages have economists. The searches for homes for sale this time this year versus this time last year are down 10%. So it's starting to make its way into buyer psychology. And at some point, and I think it's going to be fairly soon, we're going to have to see home prices taper off and then eventually come down. Nobody can expect home prices to continue to go up forever. I wouldn't want to bet on the exact time that they're going to start to go down because that's a good way to lose money. But the writing is on the wall as long as rates continue to go up. And this is really what the Fed wants, right? The Fed's trying to curb inflation. Housing is mixed in there, and that's the whole idea of having rates go up is to curb inflation. So it's not a good thing or a bad thing because you have people on two sides of the fence. But on par, I think if we see a tapering off of home sale prices and we at least see the mortgage rates hold steady for a little bit, we may see a little bit more of a normal market, and it's not going to be as crazy with inventory like it has been to start this year. One more so what's for you. Rents will very likely go up, and I'm seeing that where we are in Long Island, we don't have as many residential leases that we do, but those I would say are probably also at all-time highs in areas that have low rental inventory. New York City has seen a big increase, a big bounce back in the rental rates since the depths of COVID. So that's another big factor, and that makes sense, right? If people are sitting on the sidelines for mortgages and they're all trying to rent, you have supply-demand imbalance there, and landlords are going to look to capitalize on that. All right, that's it for now. Not sure if we're going to be back, next week. We've got Easter Passover, so I wish you all happy holidays in case I'm not on, and we'll bring you more news later this month.